Are you interested in investing in Bitcoin and other cryptocurrencies, but unsure if now is the right time? Well, you're in luck because in this video, we'll be exploring the insights of Raoul Pal, a renowned investor and founder of Real Vision. Raoul provides valuable perspectives on whether or not investors should be jumping into the crypto market now or waiting for the right moment. So, if you're curious about the future of cryptocurrency investment, keep watching. In a recent interview, the speaker made an interesting argument about the nature of the stock market and how it views recessions. He explained that while many investors fear the onset of a recession, the market tends to anticipate economic conditions and adjust accordingly. As a result, a recession can actually be viewed as a positive development for markets. The speaker argues that the market is forward-looking and anticipates economic conditions well in advance of their actual occurrence. This is why the market is often said to be a leading indicator of the economy. As a result, when a recession is looming, the market will begin to adjust to this fact well in advance of the actual onset of the recession. This adjustment takes the form of a sell-off in risk assets such as stocks. Investors who fear the onset of a recession will begin to sell their stocks in order to avoid losses. This selling pressure will drive down the prices of these assets, making them more attractive to other investors who see an opportunity to buy in at a lower price. Once the recession actually occurs, the market will have already adjusted to this fact, and the selling pressure will begin to abate. At this point, the market will begin to anticipate the end of the recession and the return of economic growth. This anticipation will manifest itself in a rally in risk assets as investors buy back in at lower prices in anticipation of the economic recovery. The speaker argues that this forward-looking nature of the market is what makes it possible for risk assets to thrive even during a recession. While the recession itself may be a negative development for the economy, the market has already adjusted to this fact and is focused on the future recovery. This forward-looking perspective is particularly important for investors who are looking to invest in risk assets such as stocks. While many investors fear the onset of a recession, the speaker argues that it is actually a good time to invest in these assets. By buying in at lower prices, investors can take advantage of the market's forward-looking nature and position themselves for the future recovery. Of course, this doesn't mean that all risk assets will perform well during a recession. Some companies may be particularly vulnerable to the effects of the recession and may see their stock prices decline significantly. However, the speaker argues that this is the exception rather than the rule. Most companies will be able to weather the recession and will see their stock prices recover once the economy begins to grow again. Raoul Pal's recent interview offers a unique perspective on the potential benefits of a recession for investors. He argues that despite the inevitable recession in 2023, risk assets are poised to thrive due to the forward-looking nature of the market. By recognizing this forward-looking nature, Raoul provides valuable insights into the importance of understanding macroeconomic market dynamics and anticipating future trends in order to make informed investment decisions. Raoul notes that the market tends to anticipate economic conditions and adjust accordingly, leading to an interesting paradox where a recession can actually be viewed as a positive development for markets. During a recession, central banks typically lower interest rates, leading to a surge in liquidity and greater demand for riskier assets such as stocks, cryptocurrencies, and other alternative investments. As a result, Raoul believes that these risk assets are most likely to benefit from the anticipated market conditions in 2023. Raoul's insights into the forward-looking nature of the market highlight the importance of understanding macroeconomic market dynamics in order to make informed investment decisions. By anticipating future trends and economic conditions, investors can position themselves to take advantage of market opportunities and mitigate potential risks. This requires a deep understanding of the underlying forces driving market trends, including monetary policy, fiscal policy, and demographic trends. One important trend driving market dynamics is the changing nature of monetary policy. Central banks play a critical role in shaping market conditions through their decisions on interest rates and liquidity. As Raoul notes, during a recession, central banks typically lower interest rates to stimulate the economy, leading to a surge in liquidity and demand for riskier assets. Understanding these dynamics can help investors position themselves to take advantage of these market opportunities. Another key driver of market trends is demographic trends. As the population ages, for example, we can expect to see changes in consumer preferences and spending patterns. By understanding these trends, investors can position themselves to take advantage of emerging opportunities in areas such as healthcare, technology, and retirement planning. Raoul's insights into these trends highlight the importance of looking beyond short-term market fluctuations to identify long-term investment opportunities. Raoul's perspective also highlights the importance of diversification in managing risk. By investing in a range of assets, investors can mitigate the impact of market fluctuations and protect their portfolio against potential losses. This requires a deep understanding of the underlying risks associated with different types of investments, including stocks, bonds, and alternative assets such as cryptocurrencies. Raoul's insights into the potential benefits of risk assets during a recession underscore the importance of diversification in managing risk and maximizing returns. Raoul Pal, the founder and CEO of Real Vision Group, recently elaborated on his views regarding the upcoming recession in 2023 and why risk assets are poised to thrive despite the challenging economic conditions. In this article, we will examine his argument and the reasons why he believes that risk assets such as stocks, cryptocurrencies, and other alternative investments are well positioned to benefit from the anticipated market conditions. Firstly, Raoul Pal explains that the market tends to anticipate economic conditions and adjust accordingly. This means that the market is forward-looking and tends to price in future economic developments before they actually occur. As a result, a recession can be viewed as a positive development for markets because the market has already priced in the recession and adjusted to the new economic conditions. During a recession, central banks typically lower interest rates to stimulate the economy and increase liquidity. Lower interest rates make borrowing cheaper and encourage businesses to invest and expand, leading to increased economic activity. This surge in liquidity and greater demand for riskier assets such as stocks, cryptocurrencies, and other alternative investments is precisely what Raoul Pal believes will benefit risk assets in 2023. In addition to the anticipated interest rate cuts, Raoul Pal also notes that the unprecedented levels of stimulus and government spending will provide a significant boost to risk assets. Governments around the world have implemented massive stimulus packages to support their economies and prevent them from falling into a deeper recession. This unprecedented level of government spending is likely to drive up inflation, which will further benefit risk assets such as stocks, commodities, and cryptocurrencies. Raoul Pal also highlights the importance of diversifying one's investment portfolio and not relying solely on traditional assets such as stocks and bonds. He argues that investors need to consider alternative investments, such as cryptocurrencies, which have the potential to provide high returns in a low interest rate environment. Cryptocurrencies are decentralized, meaning they are not controlled by any central authority or government. As a result, they are not subject to the same economic conditions as traditional assets and can potentially provide significant returns in a recessionary environment. Finally, Raoul Pal emphasizes the importance of staying flexible and adapting to changing market conditions. He acknowledges that the market can be volatile and unpredictable, and investors need to be prepared to adjust their strategies and portfolios accordingly. This means being willing to sell assets that are no longer performing well and investing in assets that have the potential to outperform in the current economic environment. Raoul Pal believes that now is a good time for investors to consider investing in Bitcoin and other cryptocurrencies. He notes that the market has already experienced a significant correction, which has brought prices down to more attractive levels for long-term investors. Furthermore, Pal believes that the current macroeconomic environment is favorable for cryptocurrency investments. Central banks around the world continue to engage in monetary stimulus measures, which are likely to lead to inflationary pressures. This environment, assets like Bitcoin, which have a finite supply and cannot be inflated away, are likely to see increasing demand. Additionally, Pal notes that Bitcoin is no longer a fringe asset, but has gained significant mainstream acceptance over the past year. Major financial institutions and corporations are now investing in Bitcoin, and more consumers are becoming comfortable with the idea of holding and transacting in cryptocurrencies. Of course, as with any investment, there are risks associated with investing in Bitcoin and other cryptocurrencies. The market can be volatile, and there is always the risk of regulatory crackdowns or other unforeseen events impacting the value of these assets. Overall, however, Pal believes that the potential rewards outweigh the risks for long-term investors in Bitcoin and other cryptocurrencies. As always, investors should conduct their own research and carefully consider their risk tolerance before making any investment decisions. So there you have it, folks. Raoul Pal's insights on the potential of cryptocurrency and Bitcoin investments are certainly thought-provoking. Whether you're a seasoned investor or just starting out, his perspectives on macroeconomic market dynamics and the forward-looking nature of the market offer valuable insights into the future of the industry. So if you're considering investing in cryptocurrencies, take Raoul's words into consideration, do your own research, and make an informed decision. Don't forget to like and subscribe to stay up to date on the latest finance insights and market trends. Thanks for watching, and we'll see you in the next one.